Mario, thank you so much for coming to the podcast. You messaged me on Twitter, and I'm excited to learn more about what you've been working on. You were former at Blockstream. That's right.
Yeah, that's correct. Yeah, thanks so much for having me on. I've been looking forward to this. Yeah, that's right. I've been involved in the Bitcoin space for about 5 years now, and my first full time job was I was a customer support lead at Blockstream. So I started there early in January 2018, and I was there for just over 3 years.
Very cool. So, at Blockstream, what was like the main thing that you were working on? Because I've been looking at like they have satellites they're working on now. There are all kinds of different custody things they're working on, finance things, and so it does tend to lead into what you're working on. Is it pronounced ledn, the new company that you're
That's
working on?
correct. Yeah, yeah, you nailed it.
Cool.
Yeah, so yeah, you're right. Blockstream does have a lot of different projects going on. My the primary role I was hired for was to do customer support for the Blockstream Green wallet. And that ended up being about half my job. The other half, I worked more closely with the marketing team, with Samson Moe and Neil Woodfine. And so I would be involved with our translation efforts, so getting our app and our blog posts translated into different languages. There's a Blockstream store. We were one of the first places to accept Lightning Network transactions when that first went live in early 2018. So I helped with that, just kind of making sure payments came through correctly and making sure people got the stuff that they ordered. And just in general, I kind of ended up being a bit of a generalist on the marketing team, would help with stuff with like social media, kind of editing copy, and so it's kind of cool. I did get to be involved at least kind of peripherally with a lot of the different projects. But the one I was most familiar with was Blockstream Green, the wallet, and
What
then
was that?
probably the liquid side chain in a second.
Was that an actual like a cold storage, like an actual hard wallet? The green
So
or
Blockstream Green is a no, it's a mobile, mobile and desktop, non-custodial software wallet. Later on, I guess it would have been earlier this year. I think it was January this year. Blockstream Jade launched, which was the hardware wallet, and that was kind of the companion to Blockstream Green. So I was involved with both. Not really on the development side of things, although I did work closely with our designer on kind of UX and copy and stuff there. But then a lot of it had to do with just pushing it out and then helping users use it, which was kind of an interesting challenge in that because they're non-custodial tools. When you're helping someone, if someone asks for support, you don't verify their identity because we don't know who the users are, right? And so when you're giving support, you kind of have to be able to do that without being able to like look into what their wallet is because we don't know which user it is. And you also have to be very wary of people, trying to socially engineer their way into someone else's wallet. So it's a really interesting challenge there. But yeah, that was Blockchain Green was most of my time, which is the mobile wallet, which is for Android, iPhone, and all the major desktop distributions. And then I worked a bit with Jade near the end of my time there.
very interesting. Yeah, I'm fascinated by the space in general. I actually just made a video on how to legally, I should say legally, and not financial advice. Everything on here is not financial advice, but how to legally not pay taxes on Bitcoin by leveraging it. And so all of us in the Bitcoin community know how to leverage, which it's is now you have so many different companies allowing you to leverage the Bitcoin. Now Coinbase rolled out a thing where it's like they're doing 8% annual or something along those lines at a 40% rate of collateral. They'll give you 40% fiat against your 100% collateral of Bitcoin. And when you do that, you're able to get the fiat you need for maybe you're building a business. Maybe you have a bill to pay that they only take fiat, whatever, but you don't want to pay a capital gain. You still want the upside of the Bitcoin. So I actually did a whole little breakdown on a whiteboard of this a little while ago. And so I'm very interested to learn about the space because as of right now, I know that there's a few companies here in the States. There's like Unchained, I think. There's a few of them that are, and I briefly looked through the website on ledn to see kind of what's going on over there. And I know that I think it's Unchained out of Texas over here allows you to actually monitor your Bitcoin, that it's in that wallet. It hasn't been moved. You have one of the multi-sigs or something along those lines, like the 3 multi-sigs. You have one of them, something like that. I'm very interested to learn more about the lending space and how it works out because as of right now, it's like I feel like Bitcoin and cold storage is the number one utility of Bitcoin. It's like being your own bank. I mean, it doesn't get much better than that. That is the number one utility. The second best utility, I would say, is being able to leverage that asset and not have to declare a capital gain on it. So we're going to learn. I'm excited to learn about that second best utility, and kind of, if you're somebody that's from the Bitcoin space and you've been here longer than I have, and you understand how people are like, if you give up your Bitcoin out of cold storage, you're a fool, and this and that. What do you say to that individual with ledn, and what kind of services do you provide that allows you to leverage that Bitcoin where they would feel comfortable with that?
Yeah. Okay. Well, there's a lot there. Okay. So we'll
Sorry,
have
it's
to
a
get into all of
total.
it.
I have
But
so
yeah,
much
no
on my
worries.
mind
Okay.
right now.
That's gonna be enough content for the rest of the show, man. It's no. Okay. So well, how about I just start? I'll just break down like who we are at ledn and what we do, and then we can go from there. So yeah, we're based in Toronto in Canada. Although we do have a heavy focus in Latin America. About half our team is bilingual, and a lot of our clients are as well. And we offer mainly two families of products. We have our savings accounts, and then we have our ledn loans. So for savings accounts, we can take a Bitcoin or USDC, and you deposit them on our platform, and we lend those out, and we're able to generate yield, and we pass that on as interest for our clients. So it's a very basic financial services savings account. You deposit Bitcoin, and we will pay you up to 6.25% interest. That's a yearly interest, which will pay out monthly. And then for USDC, we pay 9.5% interest as of December. And then, so those are savings products. And then we have our loans. This is what the company originally began with, were ledn loans. So two types of loans. So the more basic one is our dollar loans, where, yeah, you can use your Bitcoin as collateral to access dollar liquidity. So what that means is, let's say you have a chunk of Bitcoin, but you need access to dollars somehow. Maybe you have some sort of temporary expense to be able to pay back in a couple months. Maybe you have with just some other need for dollars, and you don't want to sell your Bitcoin. Perhaps you think the price is going to go up. Perhaps it would trigger a capital gains tax event, depending on your jurisdiction. What you can do is you can leave your Bitcoin with us as collateral, and we'll issue you a loan based on that collateral. And then whenever you're ready, you pay back the loan, and then we release your Bitcoin back to your control. So as you said, it's a way to finance your Bitcoin. So we have our basic dollar loans are like that, and we will actually send you. Well, we can wire USD or send you USDC, whichever you prefer, depending on your region. And then we also do B2x loans, which are like a specialized version of dollar loans. What we found is some of our clients, what they were doing is they were leaving Bitcoin as collateral, taking the dollars that we were dispersing to them as part of the loan, and they were buying more Bitcoin with it and then posting as collateral again. And so B2x automates this process. You deposit Bitcoin as collateral, and we'll issue you a loan based on 100% of that value. And we will automate the purchasing of more Bitcoin with the dollar amount we loaned you, and add it to your collateral. And then you've effectively doubled your Bitcoin holdings, but now there's a dollar loan that you owe us. So whenever you're ready to, you can either, if you get up the dollars to pay back the loan directly, you get to keep all the Bitcoin, or if the Bitcoin price goes up a bit, you can then sell just enough of your collateral to cover the loan, and you'll have more Bitcoin than when you started. So those are B2x loans.
Okay, well, let's say the savings idea is so hard for me to grasp, because in order to pay 6% annual, or 6 point something percent annual, and you said a little bit higher for USD, you would have to be lending so I give you my Bitcoin, then you take the Bitcoin and you're lending it behind the scenes to make capital off of that Bitcoin. So the custody is completely out of my hands at that point. The Bitcoin is in your hands at that point. So
that's correct.
It's what do you say to because for me, I'm like there wouldn't be like at 6% or even say 10%. Personally, I know there's people out there that are different than me, but personally, to give up my Bitcoin in cold storage, it's going to take a real
it's a big
good.
ask.
Yeah, that's something that I'm going to have to
Yeah.
figure out and go, because you're giving up your sovereignty when you're doing that.
Absolutely.
And so,
yeah.
what do you say to that
Yeah. So
individual?
I totally understand where they're coming from, and we're not in the business of trying to convince people who hold their own keys to leave them with us. Like, I totally respect that position, and I still do hold a lot of my own coins, in my own keys. I do hold some of them on ledn as well. It's a trade-off, right? And so, yeah, what happens is when you leave your coins with us, how we generate the interest is slightly different for BTC and USDC. So for BTC, we lend it out primarily through Genesis Capital, our trading partner. So if anyone's not familiar with Genesis Capital, they are the largest lender in in the cryptocurrency industry. They've been operating for about 5 years, and been a long-standing relationship with them, and they very, very thoroughly vet the people that they lend the coins out to. They're not lending them out to random people who sign up with them. It tends to be very well capitalized institutions that have many other assets that can cover cover the loaned amount, regardless of what happens with their particular trade. And so that's primarily how we generate the interest for Bitcoin. For USDC, it's actually a lot simpler. Because of our loan product, we have a lot of people leaving Bitcoin with us, and then we loan them US dollars or USDC. We get that dollar liquidity from our USDC clients who are using them on the savings account. So let's say you got, Bob as a client with us, or has an account with us and deposits USDC with us, and then, Carol takes out a Bitcoin-backed loan through us, and if she chooses to receive the dispersed in USDC, it would be like we are dispersing Bob's USDC to her, and then we earn interest on the loan from Carol, and then we pass a lot of that on to Bob. So that's where the USDC comes from. There actually isn't an extra third party involved for most of it. It's not always a perfect match between our USDC deposits and our USDC loan amount, but that's where most of it goes. And yeah, you spoke to before, about how for some people there's there's nervousness there. They don't want to give up their own keys, and that's totally understandable. If someone says, the interest rate is not worth the kind of trade-off of giving up keys or my coins, we totally respect that. What we do, there are a lot of people who already have their coins on platforms and don't hold them themselves. For those people, I think it makes much more of a sense to move over to us, because if you are going to give up your coins to an entity to control, you might as well earn some yield on them. This is an asset for which there is borrowing demand. We also take a lot of other steps to minimize risk, right? One of the reasons that this not your keys, not your coins ethos has kind of grown up in the ecosystem is because, over the last, 12 years of Bitcoin's operation, there have been a lot of poorly run companies out there. There have been kind of bankruptcies and hacks, and so it's totally understandable where this came from. So what we do is we were the first lender to actually undergo proof of reserves, which means we work with Armanino LLP is an accounting firm, and twice a year what we will do is we will allow them to go through our internal books. We anonymize all of our data, and then they go through all of our assets and liabilities and ensure that our books are in order. And then what you can do is if you're a client with ledn and you had a balance on ledn at the time we did these proof of reserves, you'll get a unique hash ID, and you can go to Armanino LLP and confirm that there is that the amount shown on your ledn balance has been properly accounted for on their end. And again, totally anonymized, so Armanino doesn't know who you are, but they know, okay, we kind of went over ledn's books, and we know that their operations are in order. And again, this doesn't totally eliminate the risk involved with giving up your keys. I'm not going to pretend there's zero risk here, but we do everything in our power to mediate that as much as possible. So that's one thing, and then the other, so that's to do with our savings accounts, and a lot of that applies to our loans as well. But the thing about using your Bitcoin as collateral for a loan is there is inherent in that there is you do need to give up some control regardless. Now, you brought up Unchained Capital. I love the Unchained Capital guys a lot. And their model is slightly different than ours in that when you take out a loan with them, the coins don't move. They're still in the blockchain, so you can see where the UTXO is. It doesn't move unless they need to liquidate the loan for whatever reason, if you're unable to pay back. So they will have enough keys in this multi-sig that they can unilaterally take it. So you are still giving up some control there, but you do have the assurance that you can see that the coins haven't moved. Now, because with us, with funds that are deposited on our platform, we do lend them out as part of our pool. We're unable to. It's different than Unchained that you do give up some more of the transparency there. The trade-off there is that we're able to offer more competitive rates and more flexible loan terms. For example, with our savings and loan products, there's no lock-in period. You open the loan, and whenever you're ready to, you close it. You pay it back, and you only pay interest up until that point. So there's none of this kind of funds being locked for 6 months or 3 months or anything like that. And again, this is to someone who says, listen, like I don't want to use your savings product because I like having my keys in cold storage, totally respect that. Like we're not out to try to, pry anyone's Bitcoins away from them. At the same time, some people do find it a worthy trade-off. For example, when I first encountered ledn, I was a client a couple of years back before I joined. I just put a portion of my keys on of my coins on ledn. Again, I didn't want to entrust all of my coins right away, but I thought there was some value in the savings account there, and I've since made use of the loans as well.
Interesting. So to go back to what you were talking about with Unchained, just so people can break it down, a UTXO is an unspent transaction, which basically means like, this is how much Bitcoin is in a certain wallet and it's been left there in the wallet, after all fees and everything, that's what's left there as a UTXO. So there's a lot of people that might be new to this and whatnot.
Right,
so
right.
you have a UTXO, and so I send my Bitcoin to Unchained. Say I send them 10,000 worth of Bitcoin. They have 10,000 there, and then basically what would happen is they still have access unilaterally, is what you're saying, to that Bitcoin. They could still take it if Bitcoin crashed in price and dipped below whatever they loaned out against it. They have the right to have unilateral control of that Bitcoin still, but I can just monitor that it's still stuck on blockchain. It's still
Exactly.
where it is. And what you're saying is you're offering a more competitive rate, but you're not. Do I still have the ability to monitor where the Bitcoin is with ledn? Okay,
No,
so
so what
I
happens
lose
is
that ability.
when you leave the coins with us, it gets pooled with the coins that were left with the Bitcoin savings account. And as part of the interest rate that we would be generating with that, we pass that on in the form of lower interest on your loan
And
compared to Unchained.
what's your rate compared to theirs? If I am getting a loan on 100, say I have 100,000 worth of Bitcoin and I want a fiat loan to the maximum capacity against my Bitcoin, what's the rate compared to Unchained versus ledn?
Wait, so the first is it's important to note that for us, like for ledn, there's a single flat rate and there's no lockup period. Whereas Unchained has different rates depending on the amount of time you need to commit to with the loan. So for us, again, it's just one flat rate. It's 9.5% is what you pay, and plus a 2% admin fee. And with Unchained Capital, you're going to be looking at just like there are a variety of different tiers. I don't know the amounts off the top of my head, but they are higher than what you would pay with us. And you're also committing to your coins being away for like a 3-month period or a 6-month period or a 2-year period. And like I've just
So
looked at their website here. Yeah,
so you said it's a flat rate fee of 9% annual on a fiat
nine and a
loan,
half. Yeah.
and 9.5. You said
Mm-hmm.
plus, and what was the admin fee?
2% admin fee when you open it.
And the 2% is
So
just a flat 2%.
yeah,
So 11.5%. And if I wanted a 1-year loan against my Bitcoin, I would be paying 11.5% with ledn. So on 100,000, I would be paying. Well, what would be the fiat loan against the 100,000? How much would you be? Is it a 50%? Is it a 40%? Is it 60%?
50% loan to value is what you get with us. Yeah,
Okay, so you'd get 50K in USD sent
yeah,
on 100K, and then you're
mm-hmm.
paying the 11.5 on the 50K, right?
Yeah.
Okay, so to get a 50K loan against 100K of Bitcoin, you're basically, because I was under the impression that Coinbase was at 8%. Are they at 8, or like what's, because I'm trying to find out what's proprietary in this lending world, because if I'm in this business, if I'm the CEO of ledn, let's say, I'm trying to think to myself, how do I get proprietary? I'm a big capitalist. I believe in free markets, because free markets will inevitably get that 11.5 down to 2% somehow. In the next 10 years, it'll just keep going down and down and down due to competition. So I'm just curious, like what is the proprietary aspect of ledn versus if I'm going through Coinbase? Because I believe it's Coinbase either 40 or 50%, and I think it was 8% annualized, up to $1 million, something along those lines with Coinbase.
Yeah, I'm not sure the Coinbase numbers off the top of my head. The main things that make us stand out, though, first of all, are basically the ledn loans are much more flexible in that we do not lock you in for any specific period of time. If you want to pay back that loan after 2 months, you only pay for 2 months worth of interest. You're not going to pay for the full year of it. Whereas most of our competitors will lock you in for these set chunks of time, and I mean you can pay back in advance, but you've committed to the interest for the period. And the other thing is we don't require any monthly payouts. Like you do not have to do a monthly interest payment. you just make a one-time payment when you want to close the loan, and you close the loan, and you're done. You don't pay any more interest a day after you decide to close the loan. So yeah. So I mean, like, we can go and compare these numbers, but like, again, like, for example, it would have been unfair for me to just compare Unchained Capital's rates and ours, and and kind of say, oh, look, if theirs is higher, like, there's no difference. Of course not. It's a slightly different model, and there are different trade-offs, and I can understand why someone would choose them over us. And again, I haven't looked into the Coinbase ones. They have slightly different terms. They're also, Coinbase's loans are also available in much more limited jurisdictions. But yeah, most of, like, the main things that distinguish us are higher flexibility. You pay back whenever you want. There's no lock-in period, and no monthly interest payments required. So those are the main things that make us stand out.
Okay, and so that's probably why the 2% flat fee. So if you were to give $100,000, you got $50K deposited, you go, Bitcoin went up to $150K or something, and you're going, I want to get my Bitcoin back because I obviously have money that's there, and I pay you back the $50K, and I do it within a month. Well, then I'm at 11.5%. You're only paying about 1% for that month, and so you total with the 2%, you're paying about 3% on that $50K that you got to get the upside over that month. So all in, like, say if I wanted a quick 1 month loan, I'm losing about 3% for a quick 1 month loan, so to speak. So I'm paying 3 points for a month.
Yeah, around there. Yeah.
So like around, like, it's like 0.9 or something like that, or something, like, because 11.5%, 12 months in a year or something. So around a little bit less than 1 point, or 3 points for a month. So if I want to do a short-term loan, and then it would break down a little bit different if you got like a 2-3 monther or something like that. So basically, to the listener out there, if you wanted, it's like if you get a quick 1 month, because I see this space dramatically evolving over the next few years. Myself personally, I have to be honest, like, I'm from the precious metals world, so I'm kind of a weird squirrel, I like to call myself up in here.
Nah, man, you're a natural fit. A lot of the gold bugs came over.
So I mean, like, I kind of I look at Peter Schiff and I go, oh, you're a bad risk mitigator. You should have. Why did you not mitigate your risk and have Bitcoin as insurance? What a foolish move that was. So my first position was getting a 10% position in Bitcoin because it was just an insurance play, like Chamath would have said, or something like that. I think I'd seen him on a CNBC thing, and that's pretty much where I got the idea. And then my Bitcoin position went to like well over 50% because I put that 10% in because I got in early. And now I'm actually in this position right now where I'm looking at these lenders and going, for mineral exchange, I would like an extra, $100,000, $200,000, something like that. It just, if I had a certain order that came in, I actually just got offered a big deal recently, and it's like, oh, how much is in the account right now? 50. Okay, we need 100. How? Okay, like, so if I needed a quick 3 month loan, but I had the upside of making 15% or something, 20% on a flip or something along those lines, it would make sense for me if I was really backed up against the wall to get a quick 1 month loan. The reason I haven't done it yet is because of and maybe you can clear this up for me. Because I'm actually like, I'm a potential client right now. It's like, it's not like I'm just like I'm genuinely in the position where it's like I've actually made videos on this subject going, okay, well, because my logic would be, if it was me personally, not financial advice, I would be thinking, okay, say I have hypothetically 100,000 worth of Bitcoin, hypothetically, let's just say a random number. If I would be comfortable saying, like, okay, well, if I need a quick loan, maybe if I keep 90% in my cold storage, keep 90K in the cold storage, but with 10K, I can dabble with that and get a quick loan against the 10K because I still control 90%. Maybe with a small position, not my entire position to go into a savings account or to go into a loan or whatever, but a small position because I'm not comfortable, and many people that understand cold storage, or most of them are not comfortable giving up their keys on all of it. So from my perspective, I think about a smaller percentage, but then I also get concerned because I imagine, based off of it's such a competitive environment, and it's why I wanted to ask you, like, going from Adam Back's company over at Blockstream, which is like cold storage, hardcore Bitcoiner world over there, to the finance world kind of thing is a pretty
super different,
totally. Because I mean, I've talked with Adam Back on the Twitter Spaces and stuff, and he's about as hardcore as a Bitcoiner can be. He's the guy. And so when I'm talking with, I talk to him about,
he was cited in the white paper.
I mean, everyone has their theories, but I don't want to get into it because I really like the guy. And but he's I asked him, are people overcomplicating cold storage? And he basically said something along the lines of like, yes, like a multi-sig is like way more than enough. Just a 24 word with a passphrase on top of it is very strong. And so
Right.
people tend to overdo cold storage. And I see, if I was going to like put my perspective on what's going to happen in the Bitcoin space, I imagine there's going to be a rollout of cold storages that are much more UI friendly, easier to use. And it's already happening, like the Model T, things like that are touchscreen, that are easy to use. A lot of videos on YouTube and stuff on how to do the cold storage. I see that rolling out and being really good for individual sovereignty. And I love the
Yeah.
idea of individual sovereignty, getting the Bitcoin out of the system and holding it in cold storage. Because in the precious metals world, it's like it's funny. The words are the same. They're both libertarians. It's like not if you can't hold it, you don't own it. Is the precious metal saying,
Yeah.
and then not your keys, not your coins is the Bitcoin saying. So it's like the
Right.
same world. And so I kind of equate it to, say I have a $1,000,000 gold bar, and I'm looking at my $1,000,000 gold bar and I go, my neighbor has a really nice safe in their garage. I'm going to trust them because they got a way nicer safe, and I want that convenience. And they told me they're going to give me, a 5% or something like that to hold my gold, and they have the safe really nice there, and it's my neighbor. I can check on it once in a while. I equate it like that in my mind, and I'm trying to figure out, does it make sense to wait for a few years until the competition really heats up and people start really biting for the clientele? Because like the clientele right now, I mean, if you have 10 different services, let's say, that are all offering the same type of thing, there's going to be some serious competition brewing over the next year or two. And it's going to continue in the cold storage space. It's going to continue in the lending space. It's going to continue in the savings space. We might even start seeing like Bank of America and Chase Bank and stuff like that trying to compete to hold the Bitcoin in the next few years. So for me, it's like my ultimate sovereignty is holding it in cold storage.
Mm.
To give that up it's so hard for me to do. But I do also run a company where I think, if we have Bitcoin on the balance sheet, it would make sense to leverage this Bitcoin, keep the upside, and if there is a potential for making, say, a 20% gain on something, and I can pay it back within a month, and I lose 3% to make 20%, then it would make sense to leverage my Bitcoin to buy a collectibles collection or something like that.
Yeah.
I think about that, but I guess I'm rambling a little bit, but the viewer out there, when I made the video, the comment that was the biggest criticism is like, what's the string attached if, say, I got a 50% loan at Bitcoin, say Bitcoin was hypothetically 60K, and
Yeah.
it crashed to 20K.
Yeah.
Could I get liquidated there? Would I get margin called there? Like, how does that work?
Yeah.
If that's what
Yeah. So
I'm curious about.
yeah, so we can get into that. So we offer loans at 50% loan to value. And in order to avoid liquidation, you need to keep your loan to value ratio at below 80%. So that constitutes a roughly 40% drop in price from when you open the loan. So there are there are a lot of things that we do to try to minimize this for our clients, because we do not want to liquidate anyone. We want our clients happy and continuing, to get their disbursement, right. And and there are a lot of things that the clients can do to ensure to minimize the chance of that happening. So first of all, is you're always allowed to over collateralize, even though we offer 50% loan to value. If you would like to add more collateral, you're free to do so. There's just a receiving address that you can get for logging into the platform, and you can send more Bitcoin there. It gets automatically topped up. The other thing you
But
can do
the
is
liquidation number is 50% though. So you're saying if I added more collateral, it
so.
would make it so.
Oh, okay. So let me clarify. So we offer loans at 50% loan to value. I mean, the amount that we loan the client is 50% of the collateral that they post to us. Now, if the amount that is owed on the loan reaches 80% the value of the collateral, that's when we're forced to liquidate. Um, so that can either happen if you just like have a loan open for like a really, really long time and the interest builds up and you kind of extend it year after year. It can eventually get to that point. Or if the Bitcoin price goes down such that the collateral is only worth, it like goes down so that the loan is worth 80% of that, that's when that point can get hit.
So
So because of this, yeah.
um, so you don't mean like if, say, I gave you a let's use round numbers here. Say I gave you one
Sure.
Bitcoin and Bitcoin was worth 100K. So we have a
Yeah.
$100,000 Bitcoin. Bitcoin's currently at 100K. You're saying if
Yeah.
it pulls back, I was under the impression like if it went to 50,000, it has the potential to get liquidated. But what you're saying is if Bitcoin goes from,
It's
if it was at 100K, if it goes to 80K, then there's a potential to
not
be
quite.
liquidated.
No. So the loan to value has to be 80% the value of the collateral. So Bitcoin would have to crash to roughly 62,500 from 100,000. Because at 62 and a half, that's 50% is 80% of 62, right? So yeah, it's
Oh, okay, because
the
you're at
amount that
50K.
you owe on
So
the loan relative to the amount in collateral. That's the LTV, the loan to value ratio that you need to keep an eye on.
So just to re-clarify that, because this is actually a question that I got
Mhm.
on the video that I did on this exact subject of talking
Yeah,
about leveraging your Bitcoin is, so we're saying hypothetically Bitcoin's at 100K, you got a 50K
yeah,
loan against your 100K in USD.
yeah.
Bitcoin goes from 100K down to 60, it would have to go from 100K to 62.5.
Yeah, I mean these are approximate numbers again because like depending on how long that took, the interest will accrue on your loan, so it might be slightly higher than that. But roughly, yeah, that's correct.
And when you are liquidated, hypothetically, would that be, do you deposit the cash value of the US dollar value of the Bitcoin back to the client, or do you give them the Bitcoin of that value back? Like, how do they get reimbursed once they get liquidated or margin called, let's say, on this?
So okay, so let's say if that happens, the the precise amount of Bitcoin in the collateral that needs to cover the outstanding loan is sold, and so then the loan gets erased. You don't owe us anything, and then there's going to be leftover approximately 20% of your collateral left over, which just goes straight into your kind of Bitcoin savings account, and you can withdraw that at any time.
Okay. And so basically like that kind of, to me that's really scary because it's like if Bitcoin fell to 62.5, I'd be like I want to buy more. Like I want to own more Bitcoin.
Right.
So I know you could call you could offer more collateral, you can do these different things, but I could see this being a short-term thing, for like a month or 2, 3 months or something like that. But for the long term, I guess you'd have to have a very bullish thesis on Bitcoin and that it wasn't going to have that much volatility.
Or a bit of it. But as I said, you could top up, you could add collateral as needed. So what we suggest people do is like, don't like for God's sake, don't do this with all of your Bitcoin. Do it with a small chunk of your Bitcoin. Like, don't overextend yourself. And then if you notice the price is dipping, you can add to your collateral just by sending more Bitcoin to it, and then that'll balance the LTV ratio more. You can avoid getting liquidated. So
because
that's why, like you were saying before, if you have like 100,000 in Bitcoin, like, and you could use like a small chunk of that, and then if you do notice the price is dipping, you can just send some of it over again. And if the price goes up sufficiently so that your LTV is very low, it's very healthy, we then will offer the option to release some of the collateral back to you, so you can have more of the coins back to your control. So you can adjust it as needed. You do need to keep
that's
an eye on it, and we do offer warnings. So, like as your LTV gets closer to 80%, if it hits 70%, we will email you directly. We're quite active on our comms, letting people know when the price dips. We say, hey, please keep an eye on your loans. We don't want anyone to get liquidated. So, here's how you top up. But there is responsibility on the client's behalf to keep an eye on that themselves. But yeah, you aren't committed to it. Like if you open up a loan, you're not just like sitting back and praying it doesn't go down too much. You can add to the collateral as needed to make sure that doesn't happen.
okay. Um, because like my play on it right now, the more I think about it, is something along the lines of, personally, I mean, all of my Bitcoin's in cold storage. None of it is on
Right,
any
right.
exchange. None of it. Every single Satoshi. I monitor my Cash App to be like, okay, I'm only allowed to take out 5,000 a week. How much do I have in there? $6,000 or something. All right, I do 2,000 a day. Okay, now 2,000 tomorrow. Now I gotta wait a week. Okay, another. Like I literally am taking it out the second I can on any, whether it's on Coinbase, whether it's on Cash App, wherever it is. I take it at Gemini. I take it out as fast as I can. Put it in my own cold storage.
Yeah.
And that's when I got more bullish on Bitcoin, actually, was understanding like, wow, I get a soft confirmation. Wire transfers don't do that for me. That's incredible. Like these different little
Hmm.
things with Bitcoin is what got me so bullish on it. And it came from the custody world of it. It's almost like I want to sit on the sidelines and wait till the right opportunity when I feel like, I guess what my question would be to you, Mario, is like, how do you see this advancing in the future? Like, what do you see coming out that's proprietary? Because as far as I can see right now, there's very little proprietary aspects going on here. I understand like a short-term loan being different than a long-term loan, you know, or and there's different things like that. But it's like, what do you see evolving to give to be like don't trust, verify sort of thing? Like how do you see this system evolving in the finance world right now? Do you see anything coming out where I don't know, there's just more sovereignty in a loan or something along those lines? Like, or how does this evolve from here to become proprietary for one of these individual companies?
Yeah, so so I think this that's a really great question, and it speaks to, I think, there's this broader trend of their kind of up until a few years ago, it was very a distinct separation. There was kind of the legacy financial system, and then there was kind of the cryptocurrency world. And then there were also, like, kind of related, you had these kind of fintech startups kind of challenging the banks, but weren't directly involved in cryptocurrency, right? And then a few years ago, lenders started coming along. Basically, Bitcoin was essentially become stable enough and volatility reduced that it was kind of safe enough that we could start offering these loan products. And we were one of the first. It was, I think there were only 2 or 3 companies operating in 2018, which is when we were founded. And that line has started to blur a little bit more. You know, like fintech companies now starting to offer cryptocurrency services. You know, lending, you can view that as kind of the financialization of Bitcoin. But Bitcoin is going to become a global money. There is going to be demand to borrow and lend it. And some of these versions of these financial services, they, you know, simply do require giving up your keys. Now, that doesn't mean everyone needs to use it. It's not for everyone. It doesn't mean you should do that with all your coins all the time. But there are certain use cases that may pop up that kind of require this. So you also asked about, like, okay, well, like, where's the space moving? One thing we can offer, first of all, is higher transparency. Like, I mean, I mentioned briefly proof of reserves. Like, your bank's not going to give you that. Your bank's not going to say, hey, we have like this independent party verifying that everything we're doing is on the up and up. You just have to blindly trust them. And almost none of the other lenders do this either. We were the first. I think there might be one other one that does it now, but you know, none of the other lenders actually have, you know, like opened their books to someone else to verify that what's going on is as we attest, right? So that's a level of transparency you're not going to see elsewhere. And then the other thing is, like, you got to remember that these services, like you said, like, you know, you're happy with the coins and cold storage just in the sidelines. That's fine. Like, you know, it's kind of funny. It's a bit of a funny thing marketing for loans, right? Because you know, for a lot of the other kind of products I'm involved in with, like Blockstream, for example, like it's easy to be like, oh, check out like our wallet. It's kind of fun to use. Check out like Blockstream Satellite. It's fun to use.
That's what I'm saying. I'm like, I'm trying to
oh,
understand
hey,
you, Mario.
Check it out. Like, use a loan. But so what we want to be, though, we want to be there and available when people need it. Like, I mean, the time may come when, again, you have like a sudden expense you need, and the choice comes between, okay, do I sell off a chunk of my Bitcoin and lose out on kind of price gains and pay a capital gains tax, or do I temporarily, with a chunk of my coins, use it as collateral, get some dollar liquidity, do what I need to do, and then get out again? That's where we can come in handy.
I can see that. I mean, like, in my world, you know, like I said, if I have, say, a big collection is offered to me, I have 10, 20% of upside. Sometimes I'll tell a client, hey, I make 10% on this. Maybe I'm selling a Rolex. Maybe I'm selling something like that. I could literally look at a client in the eye and say, I make 10%. That's what I make. That's my margin.
Yeah.
And if you're buying a $30,000 watch and I'm charging $33,000, most people are going to look at you and go, wow, that's very fair. I appreciate you telling me what your profit margin is.
Yeah,
like that's about right. You know, but so if in that scenario, let's say, you know, there's a collection that's worth $100,000 and I can make 10% on it, and I have a ability to make 110K. Well, if I don't have the capital to make that acquisition, to pay that client the 100,000, which I know that I can sell for 110 or 120, then I'm going to look at that situation and go, okay, well, I could contact ledn and then I could get 3%. If I can move this product within a month, maybe I can move it sooner. I know I'm going to lose 2% off the top. No matter what, I'm going to lose 2%. So maybe I need a month or 2 months, and I'm going to lose, you know, between 3 and 4%, somewhere in that range for having a month to 3 months, something like that. I'm going to lose somewhere in the 3 to 4 or 5%, something along those lines. And so for me to get that 4 or 5 or that 5-6% upside, you know, or maybe more on this collection, maybe it's a really good opportunity. It's a home run. Then I can see that happening for a short-term perspective. On the long-term front, I want to see free market capitalism just be brutal in this space. I want to see people just really going for each other's throats. If
Yeah.
because I believe in this space, I want this space to evolve. As of right now, I'm not comfortable. I want to get to a place where I can know in my heart where I go, you know what, I know I can trust, this individual institution, because I have, maybe in the future there's a way where there's some sort of smart contract that's on Bitcoin, doesn't involve Ethereum or anything like that.
Sure.
To the Bitcoiners out there, I said it was on Bitcoin, smart contract on
Yeah.
Bitcoin. So say that
We
happens in
have
the world
smart
where there's
contracts
some,
too. Yeah.
yeah, and so say that there's this ability to add smart contracts to the mix or something along those lines, where that that the institution providing the loan against the asset actually is able to give you custody, but also have control in some way, be it some sort of intermediary there, some sort of escrow there, like that I see. I'm just trying to think about what's going to be proprietary in the future to give that sovereignty to the person that wants the loan, because right now it's just ultimate trust. You have, that is the ultimate trust to go, okay, I need a loan, I'm backed up against the wall, or I want interest on this. That's,
Hmm.
you are totally giving up your sovereignty in that position. I know you come from Blockstream, so you're a Bitcoiner,
Yeah,
I
yeah,
mean,
no, I get where you're coming from. Yeah, yeah. Like I would say that I don't think it makes so much sense to talk about it in binary terms, right? I think there is kind of a spectrum of trust, right? Because you can give your coins to an institution where you have absolutely no insight into what they're doing, and I think people, and again, like I've talked before about the gradient, like comparing Unchained Capital to us. For Unchained, you are giving them control in that they can unilaterally move the coins. That is, um, I like that. That's inherent to the business model, right? But at the same time, that's you could still kind of view the coins that they haven't moved, right? And so, and then you move over to us, we can offer a slightly more competitive rate, more flexibility. At the same time, you are not able to view the coins on chain. So there is some more trust involved there. No bones about it. At the same time, we do things like offering our proof of reserves, for example. Like, so that's one thing I think more and more. Like Nick Carter has been great at pushing this. For example, proof of reserves. Just like one thing that like kind of Bitcoin, the cryptocurrency space in general offers is the ability to be a lot more transparent through techniques like this. And yeah, so like that's one thing. I hope more clients demand that type of service.
but you're
But
basically
yeah,
talking
it's
about
like
like when proof of reserves is like an audit. Like you're talking about that. It's much more easy to audit how much Bitcoin is on in ledn's hands, what they're doing with the
yeah,
Bitcoin, so along those
exactly.
lines.
Yeah. Yeah, technically, I think it's an attestation what we do with them, but I'm not the finance guy. I don't know the specific difference there. I will like the. I thought you brought up an interesting point earlier regarding like how like Bitcoin is sovereignty, right? So can I ask you, like, do you run a node?
Yeah, two of them.
Yeah. Okay. So cool. Yeah. So I've run a node on and off over the years, right? Like, so sometimes I'll run a node, and then sometimes I might like not maintain it for a few months, and then I'll run it again, right? But for me, what's really reassuring is that I know that like even if my node blows up or if I don't use it, if I suddenly have a need for it, I know that very very quickly I can spin up a node and I can withdraw to it. Like having the option to be able to do that is huge. Like even for people that don't run their node all the time, like it's great. It's a great process. Like learn how to do it. Like anyone listening, if you haven't done it yet, it's much easier than you expect it's going to be. And I highly recommend it. You'll learn a ton, and it's great for your self sovereignty. But like even for people who don't do it 100% of the time, having the option to do that is huge. That's one of the ways that I look at the Bitcoin ecosystem is that having the option to withdraw to self custody um, as soon as you want to um, is not now. I'm not equating that with someone who actually directly holds their coins all the time, but that is a massive step forward from kind of legacy institutions where that's just simply not an option. If you want to withdraw the digital dollars in your like Canadian bank account, for example, sure you can withdraw to cash, but you can't really do as much with it, right? Bitcoin is huge in that like you can buy your coins on on these custodial services. As you said before, you'll use the custodial services, but then you immediately withdraw. I think for people who are very kind of, not your keys, not your coins types, that's how you should view us. We're a service that's available when you need it, and as soon as you're done, if you're not actively using it, by all means withdraw to your own storage. Like that's another thing we have. Like again, that's part of the reason we aim for maximum flexibility in all of our products. Like we don't have these lockup periods. Is that you can withdraw within a day. We'll send you the funds.
I do think that that is something interesting because from a business perspective, like when I'm looking at this from like I'm an entrepreneur. I'm an entrepreneur to the core. Like I believe in capitalism. I believe in having your own company. I want more Bitcoiners to own businesses. That's one of my things I say all the time. I would love to see more Bitcoiners, running a coffee shop. More Bitcoiners having, some sort of storefront of some kind. I want to see Bitcoiners running the
Do you know
ecosystem
the
and actually
do you know
creating things.
the kebab guys up here?
Oh yeah, I've
Who
heard
they are?
about him.
We
Yeah, yeah.
just
There's
yeah yeah
there's
yeah.
some
That's
people getting with it, and I'm working on with my company being one of the first places to buy tangibles with Bitcoin and hold it on our own balance sheet. Like that's why I got my
oh
own nodes
nice.
because I'm looking to with mineral exchange and I'm talking with CPAs and stuff trying to figure this out. But I would like to have it on our balance sheet and not sell it because you got the Peter Schiffs, you got all these guys out there that immediately convert it to USD. They use that little service or whatever, so you think you're paying with Bitcoin or whatever, but really they're just converting it immediately to dollars. I want to actually hold Bitcoin on the balance sheet because I believe in Bitcoin as an asset, just like I believe in silver or platinum.
Yeah,
I
we got
kind
to
of
build like a circular economy. That's what this is about, right?
Yeah, and so if that's I want to see that continue to happen with Bitcoin, and so it's just it's such a interesting cross to talk to somebody like you, Mario, that comes from Blockstream, which is like the ultimate Bitcoiner to lending, and it's like I want to see
Yeah.
you bring the ultimate Bitcoiner Adam Back part of you, to the lending world and go, how do we do this for Bitcoiners? Like how do we make this better for Bitcoiners where they're going to just feel so confident to be with us. The short term thing, I definitely think is a step in the right direction because specifically for me, who's like a flipper, someone that buys a collection, buys an estate, does something like that, and then it makes 10% margins, 20% margins, then that makes a lot of sense. If I want to say I have, Bitcoin on the balance sheet and I believe in the upside of Bitcoin, obviously over the last year, it would have been a great move to have, a large position in Bitcoin on the balance sheet because you would have made 200% plus or whatever, so
Yeah.
that made a ton of sense. And so say you're up a lot of money and you had Bitcoin on the balance sheet, you don't want to declare a capital gain as the company, so you can leverage your company's balance sheet of Bitcoin to get these assets for you. I see that happening. That could even happen with like a restaurant. Say they need to get more, they need more product or something like that, and they have Bitcoin on their balance sheet. They leverage it. They need their quick product. They're going to make money off that product. That makes sense to me for the short term. And so, but also that makes sense as a business for you guys because that's the underlying denominator that I'm concerned with is how do they make money? If I'm doing business with somebody, I need to know like they're obviously not doing this for free. This company has to make
Yeah.
money. How do they make money?
Yeah.
I don't expect a free handout. I'm not a mooch, like, so what's the deal here? How do they make money off of me? Well, in this situation, the way that they can make money on a short-term loan is you have a flat 2%. So I can see that being a margin and that being a healthy margin to make some money on as a company. So that to me is an upfront expense. And I think that that's actually a step in the right direction rather than lending behind the scenes. I think a lot of Bitcoiners would rather pay that upfront fee than to see their Bitcoin moved around. So like a multi-sig, but you're paying to pay that premium to know that the Bitcoin is not being moved around or that you can watch that Bitcoin, monitor that Bitcoin, I think would be a step in the right direction. So it's like, I think
Yeah,
I do like the
it's
flat
absolutely
rate type thing.
something. It is something we talked about actually. Because originally the original loan products for ledn did function where the coins did not move. You could point to them on chain. But we did find that actually clients simply prefer to have a more competitive rate. That being said, it is something we've talked about is offering users the choice in between the two. Um, and it's not something we're going to be launching next month or anything. But it definitely is something that we're kind of monitoring. How much demand would there be for people who said, you know what, hell, we'll pay a higher rate. I just want to see that my coins aren't, or I just want to be able to look at them on the blockchain to know they're safe. It is something we've talked about. Yeah.
And how exactly do they like is money made behind the scenes? So we know how banks do it. They take our money and they don't have with fractional reserve banking. I don't even think they even need to hold 10% in the vaults anymore. I think they can just do whatever they want because rates are at 0%. They can do pretty much anything there at the banks now. But like how are they get basically a bank gets the money for 0% from the Fed. They give out a home loan for 4%, 3%. They get the 3% spread. They get it for free. So why wouldn't they do that? That's how the banks work. It makes tons of sense for them. But with this situation, it's like how if you have $1 million in Bitcoin on the balance sheet of other people's Bitcoin, how is that Bitcoin being reallocated other than the what you talked about before? But like what's the because this is like
Where does the
the
yield
thing.
come from,
Yeah,
basically?
where does it come from? Like
Yeah.
what are they doing? How are they lending it out? What institutions are paying for? Are they paying for solvent solvency? Are different like exchanges needing solvency right now, or like how does it? Because I do see a future where there's not enough Bitcoin for these exchanges where they start competing for solvency and paying a premium on layer 1 Bitcoin or something along those lines in the future. Because in the precious metals world, you know, when silver gets dry, when it gets really low in price like it is recently, the premiums go up on the and the actual real silver bar. You might be able to get an ETF, but if you want the real deal, if you want a real silver bar, when it's 22 an ounce or 23 an ounce, it might really still be 25, 26 an ounce. If you want that real silver bar, you're going to get that $3-4 premium on that bar. Especially if it gets very low. Like at the beginning of the pandemic, when it fell to 12, silver was like 16, trading at $4 or $5 premiums at 12. And it's like, there's like 40%, 30% premiums on these things. This is crazy. And so, but I see that maybe happening in Bitcoin where they compete for solvency, where they want to have layer 1 on their balance sheet for their clients or something like that. And maybe they charge a premium to allow you to withdraw to layer 1, something along those lines in a similar way to precious metals. But like as of right now, how are they making money behind the scenes?
Sure. I mean, the solvency point is interesting. I don't believe it to be used for that at all right now, simply because most institutions that if they would need that, they just don't. Like no one's asking them questions. This is one of the reasons where kind of like more companies need to do proof of reserves, so that like because if you do proof of reserves, then you don't have a need for that. Kind of you can attest that your stuff's in order. But yeah, the simple answer to your question is, where does the yield come from? At a very high level, simply put, there are certain trading strategies right now that that require having access to some spot Bitcoin. And there are a variety of I think they're mostly medium-sized hedge funds, and I think most of them are in the U.S. that Genesis Capital lends out to, that have identified like certain trading strategies where it requires them to hold some Bitcoin in order to capitalize on that. But they do not want exposure to Bitcoin price volatility. Maybe it's a short-term strategy, and because Bitcoin's very volatile, they don't want to know that. And so what they will do is they'll borrow the Bitcoin, because that keeps them safe from any Bitcoin price volatility risk. Even if the Bitcoin price crashes a bunch, they're holding it, but they borrowed it, so they're safe, right? So the clearest example of this, actually the most famous one a couple years ago was when I guess it was as recently as last year, it was when the GBTC premium existed. What you could do is you could take Bitcoin and you could mint more GBTC, but then there was a holding period. And then once the holding period was done, you could sell it at a premium because there was so much institutional demand for GBTC over spot. And so there were a lot of institutions that wanted to work this trade, but they didn't want exposure to Bitcoin price. And that was where a lot of demand for borrowing Bitcoin came from. Now that's just one of many, many different strategies that can come up. Yeah, that's the basic idea. There are firms out there that identified, hey, like there might be a difference in between like spot and futures markets, depending on the asset, or different things like this. Hey, this trading strategy requires using some spot Bitcoin. We don't want to get burned if Bitcoin crashes like 20% this month, so let's just borrow it. That's essentially where a lot of the demand comes from.
It's interesting. Yeah, I'm trying. I try to like, because I'm such like a anti-banks, like I'm a rebel to the core when it comes to this stuff. So it's, for me, it's like I'm trying to come from a even playing field, but I obviously hold a bias, and so I have to be fair about that.
No, of course.
Say,
you're in the Bitcoin space, right? Like this is a lot of people come here because like we're fed up with how the mainstream financial institutions have operated, right? But you got to remember, like even back during the gold standard in the Gilded Age, like there were banks like operating, lending, and borrowing. If we're going to become a global money, these services are going to exist. And so, like the question is, what do we want those services to look like? And I kind of want to go back a bit earlier, because you mentioned this a couple times, how you seem like a little bit surprised almost, though, that I had moved from Blockstream to ledn, considering it's really, really different business models, different parts of the industry. And I still remember I was a little bit primed to get interested in ledn before I met Adam and Maurizio, the co-founders, because I remember back in like I think it was 2017, 2018. Do you remember when Quadriga CX blew up, the big Canadian exchange?
I wasn't around at that time, but I did want to ask you, like, how long were you at Blockstream for? Like, what time duration? And then when did you start at ledn?
It was over 3 years. I was at Blockstream from January 2018 until April of this year.
Wow. Did you
So
ever
it was,
work?
yeah.
Did you ever work like face to face with Adam, or was it ever anything like that, or
Yeah,
was it?
yeah, like not like day to day, but I and like we lived in different parts of the world, but like at company offsites and during business trips, I got to spend time with him, and he would message me about things when needed. But Yeah, he normally worked on higher level stuff than I was working on. But yeah, no, I did get Jim. It was really cool because I was still like I've been involved in the Bitcoin space about a year and a half, and I was a huge Blockstream fanboy before they hired me. So it was really great being able to kind of interact with like a lot of those people, and like I was a big fan of like Peter Wella, for example, and like Loris Nahum, who runs the Blockchain Green team, is like he's really fun. So yeah, it was quite cool getting to work there, and yeah, I don't blame you for being I guess maybe raising an eyebrow, and that like now I'm working for ledn, just considering what a different model it is and what a different service it is. But I still remember back. So Quadriga CX, for any listeners who don't know, was the largest Canadian Bitcoin exchange for a long time. I think it was a good like 5 or 6 years, and I moved a lot of funds through them. As like same as you, as soon as it was available, I would withdraw my funds off them. I wouldn't leave them there. But in I believe it was late 2018, early 2019, the founder died on in India under weird circumstances, and then it kind of turns out that the exchange had been like completely mismanaged. It was insolvent and lost a bunch of money, just didn't have the reserves it had. And tons of people have lost their money there, and there's still an ongoing kind of legal battle to kind of distribute what funds they could find, right? Um, and and I was safe because again, I just didn't leave my funds there. But I remember thinking at the time, like I wonder how long these kind of things are going to continue happening. And I kind of had noticed they were happening less and less frequently. Like the percentage of the kind of Bitcoin activity that happens on exchanges that end up having incidents like this has gone down over time. That's partly just because the industry has matured and professionalized. That's partly because people have become more aware to it. Like Bull Bitcoin is a really cool Canadian Bitcoin service. If you're familiar with Francis Pouillat on Twitter, he's the CEO and co-founder there, and they have like a non-custodial model as a Bitcoin broker. So you can deposit Canadian dollars on their platform, but when you buy Bitcoin, you need to provide an address and withdraw it right away, right? And so models like this coming along, and I kind of realized I remember thinking like I think there's definitely value to be captured in like there's definitely valuable services and products in the Bitcoin world that can be provided, but require clients to give up their keys. But I thought that they were a bit. But I noticed that almost all the people who are really into Bitcoin primarily and really into the ethos of the community of self sovereignty didn't work at companies that offer those services. They tended towards projects like building hardware wallets, working at places like Blockstream, working on Bitcoin Core, this kind of stuff. Whereas a lot of people who worked in these services that did require control over users' keys tended more towards the kind of broader kind of crypto mania and kind of chasing trends and like whatever shiny new coin is coming next. I remember thinking like it's a bit of a problem that there's going to be some legitimate services here, and I don't want them to all go to people who actually don't care about Bitcoin and the kind of primary project. And so I was already kind of on the lookout for. I was like, I wonder like if there are going to be some real projects run by Bitcoiners who get the kind of get why we're doing this. So understand the self sovereignty, understand protection from inflation, from kind of abusive governments, but have found one of these business models that does require that direct control. And so that's why, like, I ended up meeting Adam and Maurizio, the co-founders of ledn, at a dinner in Toronto back in 2019, and I remember like thinking like shortly afterwards, like, okay, I think these guys are a good example of like the kind of company I was on the lookout for because they really get it. Like Maurizio grew up in Venezuela, like he knows firsthand like what we're doing with this whole Bitcoin project. Like he's seen inflation destroy so much of what like his family and friends had built, and like he'd been in for a while. He really was in it for the right reasons. And that's what initially got me interested. And I also like that a lot of these other companies, once you start a service like this, it's so tempting to just go and add whatever coin or whatever token just to add more stuff to the platform and earn revenue. And ledn wasn't doing that. They also raised money during the ICO boom without launching an ICO. I was like, okay, there's another kind of green flag here. And so there were a few other reasons I joined, but like that was part of it. I was like, I think that there is value in these services, and like there aren't as many of them that kind of get the Bitcoin ethos and don't get tempted by all the kind of token mania.
Yeah, yeah. It's so hard to navigate because in order like something I've talked about in the past, and this is like I brought this up in prior podcasts, is banks don't make moves because of their moral compass. They don't make moves because they're morally feeling like they want to be fair to the citizen. If they were moral, they would pay us an interest rate to compensate for the inflation that they created themselves. That's what they would do if they were moral. But they know damn well the CPI is well over 6.2%. They just gave us these false numbers. They know that inflation is way higher than that. I mean, we go to the gas pump. My gas is near doubled. It's near 100%. It's like, but they don't include these statistics in the CPI data. So if you're not making over, like, let's say 10% a year on your money, that ice cube, in my opinion, is melting. And so are there banks out there that are giving us 10% on our capital? Because their job really is to take custody of our capital and to protect it. And since they are not a depository anymore, prior we would pay them an interest rate because they used to be a depository. They would actually hold the money and they wouldn't do anything with it. And we'd pay them 2% or 1% a year to hold the capital. But that's back before they got to take the liberties with our money. They got to do whatever they want with it. And then now they make a ton of money off of our capital, and they can leverage that capital. They can take 10 grand and turn it into 100 grand with fractional reserve banking. They can just multiply the figures 10x. And now it's like, I don't think there's even a limit on them anymore. So they have the ability to leverage our capital, which is even more scary because if every American went to the bank right now and withdrew their funds, they wouldn't have the solvency. They wouldn't be able to pay all the money. So we already know it's a Ponzi scheme. Like it's a fact that the American banking system is a Ponzi. I mean, I can't say that. I guess I can't say it's a fact because it's just my channel, my opinion, guys. I'm not a financial advisor. I'm not going to argue. Disclaimer. But in my personal opinion, they're all Ponzi schemes, and the way that I could, sufficiently say so is, in my opinion, that if everybody went to the bank and said, "Hey, Jamie Dimon, I want all my money. I want all of it, every dollar," and matter of fact, send it over to Coinbase, and then Coinbase send it in my cold storage, and they're going to be like, at some point, at first, they're going to go, "Okay, here's this," but then eventually it's going to go, "Oh, we need 5 days. Oh, we need 2 weeks. Oh, we need a month." And then you're going to see lines around the block trying to get 6 feet apart, lines 6 feet apart around the corner trying to get their money out of these banks. And so to me, it's like the point I'm getting at is in order for that system to change, you don't rely on their moral compass because obviously they're high on the pedestal right now. You look at these banks and they're paying us not even 1%. Like who in what right mind do they go, okay, the CPI data is 6.2%. You have loans at 0% at your bank, Jamie. And Jamie, what are you going to do for your clients? Oh, we're not even going to give them a penny on the dollar. Maybe we'll give them 0.42%, 0.0024 whatever percent. And if it's a checking account, like barely anything.
Zero at that point.
It's pretty much nothing.
It's negative once you factor in inflation. Yeah.
Oh, 100%. Like very negative. Yeah. And so but something I like to bring up is they make money off wire transfers. They make money off of, these different things behind the scenes and overdrafts and all these different things. But one thing they didn't want to roll out, in my personal opinion, was Zelle. And Zelle is allowing us to do, 2,500 peer-to-peer, 2,000 peer-to-peer, bank-to-bank is like a Venmo, but within the banks, between Wells Fargo, Bank of America, Chase, all of these. They allowed us to use this thing called Zelle, and they limit it to like two or 2,500 a day. And then like 5,000 a week or something on top of that. But they didn't want to give us that service. They would like to make money off wire transfers and stuff. They only did that because Venmo and Cash App in the free market forced them to do that.
Well,
it squeezed them into making
is key.
Exactly. And that's why, like, in my opinion, like what I'm doing right now, and I'm excited to see you in this space. I'm excited to see a Bitcoiner in this space specifically that's a Bitcoiner to the core, that runs his own node, that understands Bitcoin. I mean, you've been in it longer than I have. So I love to see that. But what I want to see is it evolving to a point where Bitcoiners feel comfortable. Because right now, if it's me in my position, I would be comfortable. And it would still kind of be on my nerves to pay it back as soon as possible for like a month or two, and to get capital on 10% maybe of my company's balance sheet if I needed quick capital for a loan of some sort of kind. But I would like to see, there's a few things I would like to see in the future of this, and it would be going towards 80% collateralized loans, like where instead of 50%, they give 80, 90, something along those lines. But then I guess you would get margin called a lot easier, But then,
that's riskier. So
it's risky, but
yeah.
at the same time, I think that in the future, companies are going to believe in Bitcoin so much, and they're going to understand that they need to take a bit of risk there, and maybe a margin call equates to releasing the Bitcoin back into the custody minus the losses or something like that. Instantaneously releasing Bitcoin minus the losses of the margin call, shoot it back to the client then pays it up.
Well, I mean, that's basically what we do, like, already. Maybe I wasn't clear before that, like, if the margin call happens, like, whatever's left over from that, like, it's yours. You withdraw it as soon as you want, right? Like I said, it goes to your Bitcoin savings account, but you withdraw. But like when I say that, like, that's risky, the 80-90% LTV, that's riskier for the client than it is for us, right? Because again, like, our systems are operational all the time, so if we can liquidate very, very quickly, but it makes the client more vulnerable to price swings, which is why we do suggest, like, a much lower LTV. Then again, like, part of that is due to Bitcoin being very volatile. As Bitcoin grows, as volatility decreases, it is likely that it will become easier to offer these loans at more competitive rates. Again, because the volatility is just much smaller, then the risk of liquidation and these kind of price swings become smaller, and then it becomes safer to do that. So over time, I do expect you will see kind of a larger variety of these products and options. Yeah.
Yeah, it's moving in the right direction, that's for sure. Maybe for me right now, I'm not comfortable, and I don't see myself being comfortable in the near future. But something that I do like, that I learned from this conversation, is the flat fee in the beginning. I would much rather pay a flat fee, know my Bitcoin is not being moved around, and know it's a flat fee for a month or two, or I take a loan for a month or two, I get it back, and that's something I'm more comfortable with than the lockup of my Bitcoin, of saying it needs to be locked up for a year, or it needs to be locked up for 6 months. I would much rather pay that flat 2%. So I think that's a step in the right direction. And then what's crazy is you'll do that, and then now you got Unchained that'll go, okay, well, now we're doing that, and then the other company, now we're doing it, and then now we're doing it for only 1% flat fee, and then now, I see in the next 2-3 years that might be the time for me to start leveraging. But for right now, it's like sit on it and wait.
Speaking to what you were saying before about, like, what the bank, like, what the kind of Main Street banks are doing, like, I mean, I think the reason they can get away with a lot of that stuff is because there's been such a moat. Like, the amount, like how difficult is it to start a new, like, bank in the United States or Canada or, like, any developed country? Like, it's not exactly something you can just, like, do out of nowhere. Like, I mean, technology's made it a lot more easier, so you have these kind of fintech startups, but even they're kind of hamstrung in a lot of ways. This is the beauty of Bitcoin, is that, like, it really levels the playing field, and it makes it a lot easier for new participants to come in and offer competitive products. And it really, like, this really benefits clients and customers in the end, because if you're offering, like, a shitty non-competitive service, you will get outcompeted. It's going to happen, right? And Bitcoin just lowers the barrier to entry for new businesses to compete. And, like, this is also why, like, I wasn't interested in stablecoins a whole lot until a couple years ago, and I kind of get them a bit more now, in that, like, I see them as a bridge between legacy finance and Bitcoin. I don't want to be holding my my long-term savings in, like, Tether, for example. But for something like our USDC savings accounts, it can be like, it's a strict improvement over, like, leaving dollars in, like, a savings account that's going to earn you what, like 1% interest or something. That's like, if you've got money in a bank account, that's like, there's no such thing as, like, holding your own keys when it comes to digital dollars, for example. But then if we can get if people can realize, well, I could transfer into USDC, which is just like a different digitized version of a dollar, and earn 9.5% in this company over here with no lockup period, that kind of gets people one step closer to Bitcoin. So that's another part of this that really appeals to me, is that there is a certain divide that we're bridging here.
Yeah, it's something I wanted to get back to with the banks is, like, when I talk about them, they won't change based on their moral compass, obviously, because right now, if anything, they should have a moral compass now, of all times, to have a moral compass. The CPI data being at all-time highs, it was at 1.4%, or 1.2 or 1.4% in January, and then this is an annual projection. They said 1.4% or whatever in January, and now it's 6.2% in the same year. It's like, okay, so your annual projection in January has changed roughly 5%. You know, and by the end of the year, not even a year's up, and the annual projections changed 5%. Well, what are the banks doing about it? Nothing. They don't care. They're not giving you anything. They don't care if you're rich. You can qualify for a good loan and get more assets and buy more real estate. And then that really is like it's just crazy because they talk about capital gains taxes or non taking gains off of things that
Unrealized gains
unrealized capital
taxes,
gains.
right?
Thank you.
Yeah, yeah.
But that's already real estate. You already deal with property taxes, especially where I'm from. I mean, property taxes are through the roof here, and so it's like they year over year. If you buy $1 million property and you got to pay 12% property taxes on that, it's like, dude, you're paying a ton of money. Or it's or no, is it 2% or I forget the exact rate of the property taxes. But when I heard it the first time, I'm like, I don't even want to get in real estate. That's crazy. They're going to make that year over year. I better hope that property appreciates, and if it doesn't appreciate, I'm really out of shape.
Yeah,
So it's like
yeah.
the whole lending service and everything going on. But that's why I became a Bitcoiner. And that's why I'm so big into holding my own metals and stuff, is because I go, how do you get them to change? How do you get a system that is so corrupt to the core to change the evil ways and the tyranny that's going on? Well, you take the capital from them and you put it in your own custody of Bitcoin. The other part that scares me about the custodian is like the attack vector aspect. If you suddenly got contacted by, I think, well, the SEC is in the U.S., but in Canada, there's probably some sort of thing like that.
We have the Ontario Securities Commission is the equivalent authority we report to. Yeah.
So if they came to you and said, "Hey, we know all your Bitcoin," like you as a company couldn't say like,
Well, okay. I mean, like, I'm not a legal expert, but I imagine there'd be a hell of a legal fight there. They can't really do that, right?
like,
But
yeah,
yeah,
but the
yeah.
thing
Go
is,
ahead.
it's like if they came to me, I'd say, tragic boating accident. It is what it is. You all know the line. Like
Sure.
I don't know. I just how much.
Yeah.
What's a Bitcoin? I don't know. What's a Bitcoin? What are you talking about? But with this situation, there's actually like LLCs, and there's like different. There's a company. There's something like audits, all these different things. And so it's like there is this
Mm.
the leveraging aspect, not only for the individual to have their own sovereignty, but also to get the powers that be to change, to get them to go, look, they're taking their money out of our banks and they're holding it themselves. What do we do? Like, oh, well, maybe what I would see happen is if more people go to their bank, take their money out of the bank, and they put it into something, along the lines of a tangible, maybe it's a collectible, but maybe it's Bitcoin, and they put Bitcoin in their own cold storage. Well, now those banks are going to start begging them for the capital back. And that's the position I want them to be in. I want them to be in the position of going, Rob, you used to leave us with $500,000 in your checking account, and now you won't even leave us a 1,000. Why is that? Well, because I don't like you, Jamie Dimon. What do you mean? Like you obviously take advantage of me. I don't like you. I don't want to give you my money. And so then they're going to come begging to you and go, I see this happening in the future where they go, well, we'll give you enough to pay for inflation. We'll give you 10% now. And how do you get them to do that? The only way you get them to do
Yeah.
that is by stripping them of everything to the point where they're gonna fail. They're gonna die. If you take
Yeah.
away, like in 2007 and 8, 9, we should have never bailed out these banks. They should have just failed. They ran terrible. They took advantage of people. They should have failed, but we didn't. We allowed them to keep moving forward. And we paid it with the people's money, of all places to get the money. So to me, it's just I see like this rampant tyrannical corruption, and the only way to stop it is to stop letting them get fed. And an ETF or things like that, it allows them to have this like drip feed, keeping them alive. There's a way for them to make capital because they can allocate funds and take their 2% or whatever by putting money into mining stocks or whatever it is, and make this portfolio out of Bitcoin and buy ETFs and all of that, or Grayscale and all of this stuff. And to me, it's like I want to see them deprived to the point where they're begging for capital.
Yeah. I
And
mean, well, that's how we do it, man. Like, if we build this alternative financial system that is superior to the one they're running, people will move over. They will be forced to die or change. Like, that's what we're doing, right? That's why we're here.
that's what I love to see. I mean, I want to. I'm very, very interested to see how this space evolves. I mean, from this conversation, I brought this up just a little bit ago, but the flat fee and a shorter term horizon, I do see that being good. I would like that even to change on a sliding scale based on it being a 2-week lockup, a 1-month lockup, a 2-month lockup, different sliding scales based on different time durations, things along those lines.
Yeah, I mean, like,
Um,
yeah, there are so many different versions of the loans that we've talked about, and we absolutely we are really excited to expand the different kind of product offerings. And there's, like, yeah, there's at least one thing coming out in the next uh, month or two that I wish I could talk about here, but maybe
Oh,
on a
it's
future
I
episode or
thought you
something.
had sent me a message or something like, oh, I can actually talk about this new product or something along those lines, or I didn't know if this is that what you're talking about and it's just not ready yet, or
No, I don't think that was me. I think you might.
was it?
Nope.
I maybe I got it mixed up because we
Mm.
rescheduled the
Oh,
this.
actually, no. Yeah, that was about a referral program. If just we offer a bonus for I like honestly, man, this is such a cool conversation. I almost forgot about it. But yeah, no, we basically have a referral program when you kind of get a friend to join the platform and fund their account. That you each get a bonus, and so for
Uh,
December only, we're upping that to $50, 50 USDC each. But yeah, so if you once you join the platform, you get a referral link, and if your friend is in need to take a loan or is in a tight spot, they join, then you get the bonus.
I know a lot of YouTubers. They'll do like the link in the description, but I mean, like, I just for me at this point, like, I'm genuinely interested in how this space evolves, and as of right
Mm-hmm.
now, and I mean this with no disrespect, because I'm very happy to see a Bitcoiner
No worries.
evolving this space, because I think the space does get evolved. For me personally, it's not ready for me personally or my recommendation. But in the future, I want to see this rolling out to a point where, you know, that I see it being more beneficial to the Bitcoiner than it currently is. Because I guess maybe also in the near term right now that there's such a power dynamic going on in the near term of people taking custody and being self-sovereign. I
Yeah.
truly believe that. With everything in my heart, I believe in the sovereign man, and the sovereign woman out there, and taking control of your assets. So yeah, I didn't know that until I asked you, but it's like, yeah, I don't. If you notice on my channel, like, I'm not doing any ads, I'm not doing any referrals, I'm not doing any affiliates on it, because it's just, to me, it's like my sanctuary to be able to talk in YouTube
Yeah.
and whatnot, because it's like I don't have
No,
that
honestly,
many
that
friends and
was one of the
stuff.
reasons why I reached out. Actually, I'm like,
Yeah,
just like we don't go on these like random platforms that are just willing to shill any old coin or token. Like we don't do that. We don't want to be associated with that. So like, totally respect that. And like again, like I said before, we're not trying to convince anyone to give up their keys if they don't want them. Like there are situations in which you may find you have a need for a service like this, and the options are like you either need to like sell coins for liquidity or temporarily get one of these dollar backed loans. Yeah, give us a look in that situation. Consider that like we offer proof of reserves, whereas a lot of competitors don't and stuff. But like if you're not in need for that, if you're not ready, totally respect that. I see where you're coming from.
I forgot to dig into that with when you talk about proof of
Mhm.
reserves and you talked about Nick Carter. I'm actually a fan of Nick. I think he's a cool cat. I talked to him a few
Yeah.
times in Twitter Spaces and stuff. Um, it, Tell me more about this proof of reserves concept, because to me it's like an auditing venue. Am I trusting a third party auditor to do this proof of reserves, or
Yeah.
how does that differ from, say, Coinbase or something like that? Like, you with your proof of reserves.
Well, I mean, Coinbase is just Ardo checks, to my knowledge, unless they've added something. But like you give them your coins and like that's
It's
it. You
just
just
it's
hope they're
done.
doing what they
Yeah.
say to do. Yeah. Yeah. So for us, what we do is we do it every 6 months right now. We have looked into doing it more frequently, but so Armanino LLP is the accounting firm that we've partnered with for this. And again, we expose our books to them with anonymized data, and they go in and ensure that all of the assets and liabilities line up. That like none of the funds are being kind of mismanaged. That they're all going exactly where we say they're going. That the funds that we have on hand, because we do have our own reserves, we keep a substantial portion of Bitcoin and dollars on reserve for ourselves. And we do, we use Bitcoin as a custodian for that. So they ensure that all those coins are accounted for. And then what they do is they will produce a Merkle tree. For those who know what a Merkle tree is, it's essentially a data structure where you can cryptographically prove that a certain piece of data is included in an overall set. So they'll produce a Merkle tree of all the different accounts at ledn, and again, anonymized, but with these unique hash IDs. And they'll say, okay, we know that there's this amount of a balance affirmed in this account, this amount in this account. And then what you can do is you log into your account, you can get your anonymized hash ID, and then you go over to Armanino LLP and you input it there. And again, they don't know who you are or anything, but they have a tool that just allows you to look up your unique ID into the Merkle tree, and it'll match to an account that says there was this much funds on this date there, and you just make sure that matches what's going on at ledn, and you can know that that everything we're doing is on the up and up. again, like, you are confirming this through Armanino LLP.
It steps in the right direction. It steps in the right
Hmm.
direction. I'm excited to talk with you, in the future, maybe 6 months from now, maybe 3 months from now, maybe a year from now. I don't know when things start evolving in these spaces. But from what I noticed, I mean, I've been in Bitcoin for about a year and a half now, 2 years, something along those lines. And I have noticed that, I mean, all of these companies are starting to dramatically, I mean, Coinbase recently rolled out this program of theirs like a month ago. Like this is very
Hmm.
recent. So it's like, obviously there's going to be intense competition in this space, and I'm excited about that. I'm excited to see how that works, because there's going to be, I mean, it's like so many people are putting together the same puzzle. How many ways are there to put together this puzzle, and how will they figure out how to make it three-dimensional and do all these different things with this puzzle? And it's like, how does it get crafted? Because loans
Yeah.
and all these different ways of savings accounts and stuff, it can get very crafty. And when you have Bitcoiners doing it like yourself, I mean, the sky is the limit on how far this can go. But this is, to me, a very important space, and I want to see it getting evolved, because, again, I think utility, people say Bitcoin has no utility. To me, being your own reserve bank and having full control of your own wire transfers that on tap is a pretty big utility. I mean, like, you could literally take
Do
all
people
your
still
Bitcoin.
say it has an utility? I don't know. I feel like I hear
Oh,
that
they
less. And
do.
I
I
think,
try.
oh, you're
I,
totally right. You're totally right. But I have noticed in the last year or so that that kind of rhetoric has gone down. Like, it's been kind of cool. Like, I just, like, compared to even like 2017, like, you don't have big banks or institutions, even when they criticize, no one says, oh, it's a bubble, it's gonna be gone for a second. They all kind of, they've accepted we're here to stay. So yeah.
Yeah, it's a great thing is Ethereum guys aren't talking about how expensive it is to send Bitcoin anymore. Look at them; they got real quiet, real quick. They clogged up their pipes with JPEGs, and now their gas fees are through the roof. And now they're not talking about Bitcoin anymore being expensive.
Turns
And it
turns
turns out
out
it's
they all operate under the same constraints. Yeah.
I mean, they're really struggling now. I mean, gas fees are like it's like, and then also the complexity of these gases. Like I looking into it, my friend was showing me about Ethereum. I'm like, dude, this is like way overkill. Like, this doesn't make any sense for the individual to be moving stuff around. Whereas if you have like a Trezor, or you got a ledger or whatever, it's like it's so easy just to go, oh, I pay this, and now to like take it out of Cash App or whatever, it's like 10 cents free. A lot of them are free to move it around now at this point, and so it's like it's because layer one is so pure, and it's not being clogged with random things. It doesn't need to be a smart contract. If you can add to the layers on top of it, but layer one is so pure that it's actually, people are realizing that this is just a better wire transfer. And then you add layer two, you add Lightning on there, and now it's clearing up so much space that it's just going to be less and less expensive and more user friendly to use Bitcoin. It's exciting to see what, I mean. I'm very excited to see what your former employer does in the space as well. Um, Both of these, I would love to get, I'd love to get Adam's take on this. Maybe one day I'm able to talk with him again. I wish I could have asked him about the lending space and how he feels about it. Would you be able to give any insight on that? Like, how would he feel about this entire space in a way?
Oh, I mean, like, well, I mean, I certainly can't speak for Adam. I know that well, I mean, we have a good relationship with Blockstream. I think no small part because my connection there, but also, like, before I joined as well. Like, there were conversations there. Like, and and there's definitely lending going on Liquid right now, the Liquid sidechain, and that's kind of like that's an interesting space to watch, I think, because it sort of gets you some of the DeFi benefits, these smart contracts on Liquid, and Hodl has some lending services there that are it's interesting. Again, I was saying before how, like, I don't think it quite makes sense to use binary between custodial and non-custodial, and that, like, there is kind of a spectrum of these products, and, like, one of them is kind of doing these swaps on Liquid, and Liquid itself is a federation. Have you looked into the Liquid sidechain at all?
I need to do more digging on it myself.
Okay, so it's interesting because it's a side chain for Bitcoin, meaning that you can, like, it's a blockchain that operates independently of the Bitcoin blockchain, and there's a way that you can peg in coins. You can move coins that get frozen on the main Bitcoin chain, and then they show up as LBTC, Liquid Bitcoin. They can move them around using the Liquid sidechains rules. And so Liquid is not. It's not as decentralized as Bitcoin is. It's run by a federation, like it's essentially like a really giant multi-sig. And so there is some trust involved there. It's not trustless like the Bitcoin blockchain is. But then once you're on there, though, like its trust assumptions are much lower than like with a custodian or like one of these chains that's just run by like Binance, for example, or something. Um, but then because it has confidential transactions and because the federation is very large, it's it still is much more decentralized than a lot of the alternatives out there. But you can do a lot more. The kind of the chain allows for kind of different scripting rules and more expressibility in different ways. So it's kind of funny. There's almost sort of like DeFi on Bitcoin happening there, and like I think DeFi has like a lot of people have like red flags around the world, which is understandable. But I think there is some value there. I've never messed around with it on any of these chains or anything, but I think the idea of having kind of financial services that operates through just contracts that are self executing, I think there is some value there. And so I think if you were to ask Adam, that's probably what he would draw your attention to. I would imagine Hodl has some swaps on Liquid that allow you to do some of these things. But yeah, I mean, again, like there's going to be different models for different use cases, depending on what your needs are, depending on how long you want coins to be locked up, depending on what degree of transparency you demand or don't require. So yeah, I'm really looking forward to the fact there's going to be a wide spectrum of these, and people just have to decide which platform is best for them.
Well, I respect how open-minded you are and answering all these criticisms and stuff. I definitely I have that bias where it's like I don't like banks. Every time I go to the bank, I look at my banker and I literally tell him I don't like him, and he laughs. But like they literally have. I've literally gone to the bank and I've put a cold storage on
You
the counter
personally,
before.
I don't like you.
Well, no, I've put a cold storage because like with this guy at the bank, he actually like he's my banker and we're friends. Like he helped me get a secured line of credit and build the line of credit under on LLCs and all that stuff. But basically like he's like, why don't you leave any money with the accounts anymore? It's like because it's right here, guy. It's right here. And I bring a cold storage in my pocket and be like, it's right here. I'm my bank. You see that? All the money's in here, and you're gonna have to start
You
treating
bring
me
it with
right.
you to the bank.
I do. I literally do. I sit down
But
with
you
him and
don't bring
have
it
like
around with you anymore. That'd be bad offset.
well, I mean, they're gonna have to put a Neuralink in my brain or something along that lines because
Sure.
you could take that device and break it and it wouldn't mean anything to
Sure. Yeah,
me.
yeah.
But I might even break it myself. I might
What do
even
you
back.
use? What
I
do you use for cold
actually,
storage?
dude, I'm a total nut. Like I have like two treasures of both kinds of treasures. I have two ledgers. I have two of these Kobos, and then you change the keystone or whatever. And then I got two cold cards. I got two nodes, one
Yeah.
with Umbrel, one with my node. I mean, I'm just
Nice,
a
nice.
nut because I just wanted to learn everything about it. Like I literally spent. I must have taken like 3 weeks. So my business was doing better than ever before, and I just turned it off for like I want to say almost a month, just to learn as much as I possibly could about Bitcoin because it was just
Yeah,
I
yeah.
was so fascinated by it and just learning more and more about it. So the cold storage space, I see that space evolving a ton as well. And the other thing too is like with my YouTube channel, I didn't want to talk about something until I actually knew what I was talking about. And I feel like at
Yeah.
this point, I know like 30% of what I need to know about Bitcoin, and because there's just so much to learn. So it's like as I continue to learn more and more about it and can get inch towards knowing 50% of what I need to know, it's like I just know that it's just a fascinating world because I come from the world of doing wire transfers every day. That's my life.
Yeah.
Like, the wire just landed. Oh, sweet. Okay. Oh, this happened. Okay. Send a wire over to that guy. Like, we'll put in the routing number, the account number. What's your business address? Okay. What's your person? Okay. Now I need to know, now I want to know your bank's address. So your business address, your bank's address, your routing number, your account number. And then I have to go sign a bunch of paperwork. And if it's over 50 grand, I have to go down to the bank itself and do a bunch of paperwork down there and all that. Talk with a banker that hasn't had his coffee that morning and he just doesn't know what's going on. Lose an hour of my life to do this wire transfer. And then it's like, when I
Yeah.
saw
Wire transfers
Bitcoin,
are the worst, man.
and it's the only way to
It's
spend larger quantities of money. It's the only way to move larger
yeah.
amounts. I mean, you can do checks, but I mean we do digital checks now, which is pretty cool. But when it's like wires, it's like it's as close as being a done thing. Like with Bitcoin, once it's sent, it's done. It's over.
Yeah.
But with wire, it's the same thing. It's
especially
like
especially for international transfers, man. Like I was living in South Korea when I first got into Bitcoin, and that was one of the things for me. I was like, I can do my own remittances. I can send my own funds back to Canada. I don't have to do this like go to the bank, wait in line for an hour, and like kind of hope it gets there in like a week, and paying a bunch of charge for it. Like, yeah, so like for me that was so cool. That was one of the first kind of like me actually using Bitcoin was like I would I would, get my paycheck, and the stuff I want to send back to Canada, I would buy Bitcoin with it, and then sell it in the exchange in Canada. It was faster, like doing these like 4 steps than just doing a wire transfer. And I could do it myself. I was like, I could see it every step of the way. Yeah, it was great.
And as more and more people start using it as their unit of account, and they don't even withdraw the Bitcoin, they just keep it in their own UTXO. It's like goes UTXO to UTXO, and then people just leave it in their own accounts. Like they're not even throwing it in exchange.
Yeah, there is no international. There is no border. It's just, it's in the Bitcoin system. Yeah.
And so that to me is like, wow. And El Salvador is on the forefront of that. I mean, I'm curious how this Bitcoin bond thing works out over there.
Have you been to El Salvador yet?
No, I'm just I'm too busy working on so much stuff over here that I just it's hard for me to figure it all out. But yeah, it's
interesting. I got to be there last week or the week before for Bitcoin Week, La BitConf, and adopting Bitcoin, which was it's fun getting off the airport and like. What's that?
What's it like flying international right now? Because like to me, it's like I've been in, the funny thing is it's been a pandemic for me for the past 6 years, so I didn't even really notice anything except having to wear a mask now. I've just been busy in my warehouse building stuff all the time, and so it's I just haven't even really left. But I want to start traveling soon. I don't even know what the airport will be like right now. I wonder like are they going to need me to. I don't want to get into like all that type of stuff.
As a Canadian, it was like the airports were way less busy, which was nice. You got to wear a mask everywhere and like provide extra documentation, which is a pain in the ass. But those are the main differences. To be honest, I didn't even notice that just because I was like stoked to be going to El Salvador and like get off the plane and like you got to pay for your visa and it says like on the airport Bitcoin accepted here. And you're like, it's happening, man. It's yeah.
And it could really, I mean, if South America keeps rolling out further and further and further like that, I mean, it could. I mean, the funny thing is that you could ask one of your partners over there, that the guy you said that was from Venezuela. It's like, why has Venezuela not? They're the ones who really know what it's like to feel pain in their currency just absolutely crashing into nothingness.
Well,
it's like they should have been one of the first ones.
There are a decent number of Venezuelans who do Bitcoin. Like it's more than one at our company. There's a decent chunk of ledn employees are Venezuelans, and there are two Venezuelans coworkers. One co-founder Maurizio, and one my colleague Alessandro. Both born and raised in Venezuela, and again, a few of the other members of our client success team and elsewhere. So it has been fun, chatting to them a lot about how it's actually used. One thing that surprised me that came up, I was chatting with, do you know who Anita Posh is?
Sounds familiar, but I don't.
She does her own podcast, and she has actually traveled to Zimbabwe and other countries in sub-Saharan Africa to try and help people get access to Bitcoin. And I was lucky enough to get to chat with her a little bit at LebitConf, and one of the things I kind of noticed was the two countries that are, I think, most famous for inflation right now are in the last 5-10 years have been Venezuela and Zimbabwe. Those are the two countries that you see these $100 trillion bills and stupid amounts of bolivars, et cetera. And I know a lot of Venezuelans in the Bitcoin space. And it's an energy rich country, so mining happens there, and there is it might be my bias as well, just having the part of the industry I got involved in. But I don't know of any Zimbabwean Bitcoiners. I don't hear about mining happening there or any companies that founded by Zimbabweans. And so I'd be curious what the main differences are there. I guess there's some differences I know of that I know Venezuela used to be a much wealthier country and it's better infrastructure, et cetera. But I wonder if there are other kind of cultural elements that kind of go into that. But we'll see. Who knows? Maybe there's going to be a burgeoning Bitcoin scene down there in a few years. It may come.
It's exciting times. It's definitely exciting. I just sitting back and watching right now and just hoping more and more people start adding, to their balance sheet a bit of Bitcoin. Not financial advice, but I just think I love the way Greg Foss put it when I talked with him. It's just bad. It's bad risk management, not to have any on your balance sheet. And so people out there that don't have any Bitcoin, it's you can have 1 to 5% and then be totally fine if it goes to zero. It's just a good play because we need something like this in the digital realm that allows people to have their individual sovereignty.
The Hal Finney comment on this?
I don't.
You know Hal Finney is, right? Like
Yeah,
he's
yeah,
the
of
first guy
course.
who ever received a
It's
Bitcoin
it's
transaction,
very
right? Yeah,
curious that he froze himself. It's like because like I wouldn't freeze myself unless I knew
interesting.
that there was something waiting for me. If like why would I freeze myself? Like there's only so I think there was only like I think there's only like 300 people or 3,000 people or something like that have been frozen cryogenically in his
Yeah,
region.
Alcor, the community that frees liquid nitrogen. I would totally do that. I think I but
You know,
no,
you would
yeah,
if you were Satoshi. You would. It's like,
but like one of his earliest comments though on Bitcoin was just doing some basic math and like, okay, if this becomes like kind of global money, even if there's a long shot, and like he just had a very casual comment like it might be worth holding on to some Bitcoin just in case it takes off. And yeah, I like again, like it's kind of funny because like, it was one of the earliest comments on one of these like random forums where there's just a few people who knew this thing existed, and it holds true as much today as back then. I think sure, like the risk if you put like 1% of your portfolio into Bitcoin, sure you might lose it. Who knows? Bitcoin's volatile. Uh, there's unknowns, but there's also risk in not holding it. Again,
yeah,
not financial
yeah.
advice.
Yeah, the risk of not holding it far exceeds the risk of holding it, in my personal opinion. So that's what made me. I mean, I'm living proof that a 10% position turned into over a 50% position based off of having an insurance play. So I mean, that's how I
Yeah.
started, and then as it grew and grew and grew, that's what forced me to learn more and more about custody because I care about my money. Obviously, I care about my asset. I don't want to lose it. I don't want to do something stupid with it. So now it's as the number gets higher and higher and higher from what I first started with. It's like, wow, I need to protect this. That's quite a bit of money there. Like I didn't expect for it to get to be that much. So now you have this thing to protect. And so that's where I come from with my bias is just, it's all because I'm genuinely curious in this. I'm curious about what you do in this space and how it continues to evolve. Because, I mean, let's be honest, over the last year, the space has evolved dramatically. Like what's going to happen in another year and another year and another year.
Yep.
I'm very curious to see how this continues to evolve and the ideas you guys come up with. And that's how it should be. We should have a free market capitalism with the banking system. We should have that. We should have people that are competing with one another to get the best rates, to get the best service. That's how we get an iPhone. You have Samsung and Apple competing with each other, and you get these fancy phones. That's how we get these great things that we have on our day-to-day life is from this crazy competition and this headbutting match between companies to be the best. And I'm curious, between ledn, Unchained, Coinbase, Celsius. I mean, I'm sure I'm missing quite a few of them here, but I mean, now you said the hodl liquid thing. I have to look more into that myself. But like all these different things that are going to allow us to do finance with Bitcoin, there's going to be intense competition in this space. So it's exciting to see what happens next. And I appreciate you taking the time to kind of go over these things. I learned a bit from you, and I'm sure a lot of people did as well. I appreciate you taking the time.
Yeah, no, this was fun. And I appreciate the real direct questions. Like we come on these shows because like we want to be transparent. We want to answer whatever people's concerns are. So I appreciate you asking. Yeah, this is actually some of the best questions I've got in an interview. No joke.
Well, it's because I'm genuinely like in this. I'm a collectibles dealer that has a large Bitcoin position. Like
Yeah,
I'm constantly buying estate deals. I'm constantly buying collections, constantly buying and selling from other dealers and buying from clients and selling other clients. Like I'm constantly in this trading game. So leverage is nothing new to me. I've been leveraging since day one. Uh,
mm.
the amount of leveraging we do in collectibles is unbelievable. Whether it's like we give each other 2-week loans all the time. Like, yeah, can I pay you 2 weeks? Yeah, I can pay you 2 weeks. I'll commit to that deal if I get a 3-week grace period. I'll commit to, like I do leveraging all day. So for me, this is my bread and butter. So to learn about
Right,
this
right.
and spend time on this, I'm fascinated with the space to the point where like I would want to be involved in the evolution of it in some point, but I just can't. I can't wrap my mind around. I always got to find something that's proprietary. When I dig into something, there has to be something proprietary for me to be interested in it. That's why I'm on
Right.
YouTube, because making your own YouTube channel that's proprietary to you. That's your thing. But it's like I want to find a way to be different than everyone else, and so far I haven't found that yet. So I'm just very curious to check in with you, in a little while in the future and see how things are rolling out with ledn. How big of a company is it, by the way?
So we're up to I think we just cracked 60 employees in terms of size, and we've got over $1 billion assets on the platform.
Very cool.
So we cracked that earlier this year. Like in terms of capitalization, we raised around in May this year at around we raised 30 million. So yeah, it's grown a lot in the last year or two. When I joined, I remember interviewing, and there was, I think, 10. Like I got to meet the entire company before I joined. It was about 10, 12 people maybe, and so yeah, it's been a lot of changes the last year. Yeah.
Very cool. Well, I appreciate you again taking the time, and everybody out there watching, thank you for watching. If you'd like to subscribe, click the subscribe button. If you want to hit a like, appreciate a like. It's and also your Twitter information, I'll put it in the bio down below. So if you want to follow Mario on Twitter, go check him out there. And yeah, it's been fun talking with you because again, I want to be able to use this, and I believe it being the second best utility to Bitcoin, the first best one being your own bank and having full custody, this being the runner-up where you can leverage your custody to get, and this could be very helpful if you need a different currency, if you need a euro, if you need a yen, if you need, yuan, you might be able to leverage and get a wire transfer in the currency where you're at in the world where you need this specific currency. I know people talk about that all the time.
We do wire disbursement right wherever you want it.
Now that's
So,
very interesting there as well. I wish we talked a little bit more about that, maybe for next time.
Sure thing.
But yeah, thank you again for your time, Mario, and have a great rest of your night.
Yeah, you too. Thanks for having me on.